All right, let's talk about your money. If you feel like it's just sitting there in your bank account, not really doing anything, you're in the right place. This is your cheat sheet for putting your money to work. We're going to break down a super simple but really powerful plan to make your cash hustle for you so you don't have to work so hard. Let's just dive right in.
And yeah, that quote pretty much says it all, doesn't it? That's the biggest problem with a normal paycheck. You're literally trading your time for money. But what if you could just flip that whole idea on its head? Investing is how you do it. It's like you're hiring these tiny money minions that work for you 24/7. Seriously, they don't sleep, they don't take holidays, they just get up every day and work to grow your wealth.
So to really get why investing is the answer, we have to be super clear about the problem we're solving. And it's not just that the paycheck stops when you stop working. There's this invisible thief that's quietly robbing you, even when you think your money is all safe and sound in the bank.
And here it is. This is the main villain of our story today, inflation. It's that sneaky thing that makes your coffee, your gas, your groceries, everything, just get more expensive over time. It means that the dollar you have in your pocket today is going to buy less stuff next year. It's a silent killer for your savings.
This chart just lays the trap out perfectly. Look at that. Your savings account might be earning you a teeny tiny 0.5%, but if inflation is humming along at 3%, well, you're actually losing 2.5% of your money's buying power every single year. Your money is shrinking, not growing.
So how in the world do we fight back against that? We fight back with the hero of our story, compounding. This is such a powerful idea. It's when your money starts making its own money, and then that new money starts making even more money. It's like a snowball rolling downhill. Just to give you an idea, a single dollar you invest when you're 20 can turn into over $80 by the time you're 65, all without you adding another penny. That's the pure math of how you build wealth. Okay, but hold on. Before we go on the attack and start investing, we got to build our defenses. A solid foundation is completely non-negotiable. Think of these as the two critical moves you absolutely have to make to secure your financial base before you even think about putting a single dollar into the market.
Just take a second and look at this number, 20%. That is a pretty typical and frankly brutal interest rate on credit card debt. Trying to earn enough from investments to beat a debt that's costing you 20% a year? That's like trying to fill a bucket that has a massive hole in the bottom. You just can't win that fight.
So the game plan here is to follow these two steps, in this exact order. First, as the source so beautifully puts it, you yeet the bad debt. Just get rid of it. Obliterate that high-interest debt like credit cards. It is the #1 threat to your wealth. Then, second, you build your emergency fund. We're talking 3 to 6 months of living expenses stashed away in a high-yield savings account, which, by the way, pays way more interest than a regular one. This is your life preserver. It means you'll never have to sell your investments in a panic if something goes wrong.
Okay, shield is up, defenses are solid. Now it's time to go on the offensive. And the absolute key here, especially when you're starting out, is to keep it unbelievably simple. You do not need to overcomplicate this stuff. Let's look at the best first move you can make.
And there you have it, the greatest of all time, the GOAT. For anyone who's just starting their investing journey, low-cost index funds. This is not about trying to find a needle in a haystack or picking the next Amazon. This is about a simple, powerful, and proven strategy that just works.
So what on earth is an index fund? Just think of it like a big shopping basket that holds tiny little pieces of hundreds of the biggest, most successful companies out there. So instead of putting all your money on one single company and just hoping it does well, you're making one broad bet on the growth of the entire economy. You get instant diversification, just like that.
And this just lays out the difference perfectly. Over on the left, you've got stock picking. It's a high-stakes gamble, it's stressful, but on the right, you have index fund investing. See, you're not trying to be a genius. You're just riding the wave of long-term market growth. Now, which one of those sounds less stressful? And more importantly, which one sounds more reliable for building real wealth over time?
All right, so we've got our shield, we've got our investment of choice. How do we actually, win the game? Well, the secret might surprise you. It's not about making exciting, brilliant moves. It's actually about being incredibly, wonderfully boring.
The key strategy here is something called dollar cost averaging, or DCA. This is the absolute definition of set it and forget it. All you do is commit to investing a fixed amount of money, let's say $200, every single month on autopilot. You don't read the headlines, you don't worry about crashes or bubbles, you just let the system run.
This little chart shows you the hidden genius of DCA.
When the market is up and prices are high, your $200 automatically buys you fewer shares, so you're not overpaying. But when the market takes a dip and prices are low, that same $200 buys you more shares, basically scooping them up at a discount. It's a simple system that takes all the emotion out of it and automates the classic strategy of buying low.
And this quote just wraps it all up so perfectly. At the end of the day, long-term success isn't about being some kind of genius who can predict the market. It's about having a simple plan and just having the discipline to stick with it month after month, year after year. So I'm going to leave you with this final thought to chew on. We spend so much time chasing excitement and complexity because we think that's where the big wins are. But what if the most powerful, the most effective, maybe even the most revolutionary move you could make for your financial future is to just embrace the boring, to be consistent, to be disciplined, and to be patient? What could that change for you?